Some people like to put their money aside for 401k. Some people like to put funds aside for IRAs, 529s for their kids, etc. So by all means, all of those are terrific choices. Just never spend every single penny that you earn, for what is available today. And then if you want to get a little bit more complex on that, invest or purchase things that don't appreciate. So whether to buy that really cool car or buy a piece of junk house, I would take the piece of junk house over the really nice car.
Welcome, listeners. Today, I have the distinct honor and privilege of having a new friend that I met when I was out in Las Vegas a few weeks ago at a convention, William Wang, on the show. He is just got an amazing story with real estate investing and just his career to this point. He's been super successful, and he is now the director of government and commercial lending for Icon Business Bank, and has been in the commercial lending space here for some time. And so I want to learn all about it and share some of William's just really fun stories of success in real estate over the last couple of years. William, welcome to the show today.
Thanks, Paul. It's a privilege and definitely an honor. I am really excited to join you on your podcast and share and help some of your listeners as well as get together and grow together. So there's a lot of things that I'm looking forward to discuss with you and get going.
Yeah, awesome. Absolutely. So, William, I always like to start just with a little background for context on people so they kind of know where you're coming from. So, I know that you started college at a young age and did really well. So, wherever you want to start there, and then how you got into real estate and then real estate lending, and just tell us some of the highlights.
Yeah, absolutely. You know, um, as a Chinese American family migrated to the United States in the late 80s. We came from just very humble beginnings in the Commonwealth state. My parents, didn't come from much, and they came to the States with nothing but a dream. In the early days, I didn't have the privilege to join them, to come to the United States. So they came by themselves to kind of establish ground and understand, the basic business metrics as well as just setting up a living for themselves as well as the family. So I live with my grandparents and other family members for quite some time until I had the opportunity to join them in the United States around lines like age 10. Reason why I'm sharing that with you is just it gives a little bit of color in regards to, some of the academic expectations as well as, how just our culture curates, the expectations of folks in my generation. So to say the very least, they were definitely, I grew up with tiger moms and tiger dads. Um, so went to college when I was 15. That was a huge eye opener. The experience is definitely different than what most everyone perceives. There is a little bit of a gap from a social aspect, but it is what it is. So I had a little bit of a head start in the career. And, right when I turned 18, finishing college and going into the real world, that's in 2008 when my generation biggest recession experienced. But you don't know that you're in a recession until you're looking back at the recession. So at the time, I just figured, hey, I got this, hey, I got things to do. And whether, I had an entry level job or an analyst, etc., I need to be financially fit. So kind of, that was the journey that I had starting my financial background and journey 17 years ago, you know. Um, I like some of your podcasts, Paul, and you obviously inspired and mentor a lot of your listeners and your folks. Um, 17 years ago, unfortunately, I didn't catch a podcast like this, nor did I have a wonderful mentor. But one of my colleagues, that shared with me is that, you know, if you have nothing to like work towards to, and you have nothing to save for, um, you're renting right now. Go buy a home. Well, remember it, back then, 20 years, it's not late, I started as a teller making $7 an hour, but my rent was only $850 a month. And that's what Los
Wow.
Angeles, right? Nowadays, for $850, I don't think you can rent a bed in a co-living space, right? Um, yeah, so it was quite different back then, but that comrade slash feedback kind of embedded in my heart. Something for me to think about, right? When I have a little bit of time here and there. So, uh, fortunately, with the opportunity of going through that recession, um, homes were a lot cheaper. And back then, we had this big home short sale. We had a big called estate sale. We had a big called, default, and probate sales, etc. So my first home was a short sale. And I bought it with 5% down payment. And for the longest time, I would say, hey, um, one day I'm going to own my own bank, or I'm going to start a bank, or I'm going to join the noble, a bunch of entrepreneurs and do it. And it's like, I'm not sure where I quite want to land. Um, I see how my family struggled and my parents struggled during their earlier times. Um, I had a passion generally just for like financial literacy, as well as um, was helping folks with the limited resources that I had since this. And this is 17 years ago. So I took on my first home. Um, throughout as my career progressed, right, going through like retail banks and going into commercial bank. Um, I just kind of like had excessive income here and there. One of the things, that I never really had an opportunity aside from working my career was to start the family that I have now. But in life, what I realized is just everything kind of happens
Mm.
the way that they should and the way that they need to, no matter how hard my family, my parents places me. Um, it's like I bought my first car. They say, when you gonna buy your first house? When I first buy my first house, it's the way, have a wife, right? You know, um, one day when I do have a wife, or a few years ago when I did marry a wife, it's the way you have children. So that's those things that the law that I kind of have to go through. But
And
looking
and
back,
and when are you gonna be a doctor, William? Didn't they ask
yeah,
you that?
yeah. So fast forward, right? That's funny. I think fast forward, whether I, finished grad school or part of this amazing team on this new event, you know, um, but then one day when I go home, my parents go, well, are you a doctor? Are you a lawyer? And I'm neither of us. But um, I guess to address your question, like how I got stumbled into the real estate industry was just that was the only thing that I had accessibility to was
Mm,
borrowing because I worked in a bank, and at a very young age, we had accessibility to programs where we can finance 95% loan to value for
mm,
primary residences. Um,
right.
and those were one of the things that, because we worked in a bank, we had accessibility. So later on, through various different channels, as well as the nonprofits around our area, I had the opportunity to share and kind of educate borrowers that these are available products.
Mhm. And so just wow, just a lot to unpack there. So I didn't mention in the beginning, but one thing we are going to get into, you mentioned like starting a bank. Well, your career has come from starting at $7 an hour as a teller at a bank to now just starting a bank with some partners, and it's a fascinating story in 17 years. And you talk a little about your culture and the expectations that your parents and your culture had on you, is really kind of a fascinating idea because people tend to rise to the level or fall to the level of the expectations that are put on them, right? And so, like, if you have a team or employees or family, if you set the bar low, that's what you're going to get. But if you set the bar high, you're going to get that. And I would venture to say that you didn't say it, but that you came here, you learned through that culture, through your parents, and everything, just an amazing work ethic. And I mean, you're not just sitting around and everything's coming to you. The last 17 years, I think you've worked your tail off, to get where you are. And I know you're always hustling. You just told me you just came back in from Chicago and you got all this stuff going on, but it's the work, but you also you use this term financial literacy and financial fitness, and that was kind of a mission for you, a passion for you, like when you got started. And is that what
Yeah.
kind of drove you, like right out of the gates?
So yeah, a little background, quick story. So my mom and dad came to this country with very minimal, not just financial literacy, but language literacy. So
Mm.
myself as well. All jokes aside, I always say English is my second language. I spoke money first. But truthfully, I never really, not a day in my life I've ever worked for money to make money.
Mhm.
So two things to kind of recap on what drives me. Number one was I remember a few scenarios that I recalled. My dad, as a business owner, then he either felt short or had a disadvantage, because of his language barrier and his responsibilities to serve financial resources. You know, back 30 years ago. And surprisingly, in 2023 or in 2008 or in 2015 or any point in my career, that still exists because of a borrower that is accessing their capital. Obviously today's rate is significantly higher, has risen significantly over the past 5 years, but there are still borrowers that access to their capital is 15% versus,
Mm.
they're in the same qualification that they can access the same capital as settlements. That's
Mm.
a significant difference. And without going into too much complexity and make me sound like a financial nerd, that's the weighted average cost of capital. And if your weighted average cost of capital um, is significantly different in that essence from 7% to 50%, how equally or fairly compete with your competitor?
Right.
Um,
Right.
that's gonna make a huge difference. Work ethics comes into play. It will help everyone, but it's not a key when you're fully whacked or when your weighted average capital is that significant. So one of the channels that I leverage to do financial literacy is with Asian Real Estate Association.
Mm.
This is a kind of nonprofit organization, actually the largest trade organization in the United States. That's not for profit as well, for Black Asian descent, and they buy paid. This is a platform basically. I host a lot of seminars and kind of just have a little bit of engagement and teach whoever wants to listen. Um, and truthfully, the other thing is just the other driver that, right, kind of drives me is, even when I was 18, my first job as a bank teller, making $7 an hour, um, I didn't want the best thing. Like, I didn't know what to want. Like, I didn't want to drive a Ferrari. I didn't want to drive a Lamborghini or live in, a 10,000 square feet mansion. Um, I wanted to have nice clothes, eat good food, and then just kind of not have to be concerned on a monthly basis in terms of my expenses. Like it was very, very, very short sighted goals. But 20 years ago, Cheesecake Factory was a terrific meal. I didn't know what caviar or those luxuries were. And I think that the standards for food expectations just rises. And it's the same thing for all like kind of expenditures and such. But what the second motivation drives me is I wanted to provide a sustainable, but also a very, very, you know, um, comfortable living style, lifestyle for my mom and dad, for my family, and now for my wife and my daughter. Like, I still remember when I made $7 an hour. I spent like less than $100 on a month on all of my expenditures. And I'm still okay with like soy sauce and rice, right? And but there you can't, it's hard to make the same expectations for others. And at the end of the day, that's one of the things that drives me, right? It's like, okay, how's the lifestyle of those I love that are around me? So
Mhm.
um that is
And
that
so
kind of
well,
keeps
that's
me
that's
afloat.
a huge
Yeah.
driver. Yeah, no, that's a huge driver. So you really so originally it wasn't really for you, it was for your family, your parents and family, and then now it's for obviously your wife and your daughter and your future family. You want to be able to provide whatever they need, whatever they want, and you're doing it away by you're helping people, right? Through your to expose people to a level playing field in terms of this cost of capital. It's like, well, if you can get 7%, you shouldn't get 15, you should get 7, and you could be competitive at 7, and now you have a chance to win. Whereas if you're at 15, you've got such a weighted drag on your back, that it's going to be near impossible, or at least a lot more difficult to succeed, in business, because business has enough challenges as it is, right? And when you look at the cost of the lifeblood of business, which is money,
Yeah.
right, to drive it forward, then everything else is impacted as well. So okay, so we got your drivers. We see where you are now. You started with that dialing back a little bit to your real estate experience. So you bought that first house with 5% down, and that's 15, 16, 17 years ago. And then you've been doing some investments in there, kind of side by side your career growth, right, over the last 17 years.
Yeah. Yeah. So, financial literacy is a broad term and there's so many availabilities for everybody. So when I speak on my own experience, just pertains to like kind of what worked for me. Some people like to put their money aside for 401k. Some people like to put funds aside for IRAs, 529s for their kids, etc. So by all means, all of those are terrific choices. Just never spend every single penny that you earn, for what is available today. I guess the the consensus is just make sure that there are funds put aside, and invest it, right? And then if you want to get a little bit more complex on that, invest or purchase things that don't appreciate. So whether to buy that really cool car or buy a piece of junk house, I would take the piece of junk house over the really nice car any day. And then if you want to get a little bit more complex on that wrestlers, you know, never have short-term debt. If you must have debt, man, and obviously I'm well, and I'm able to pay my bills because I survive or I thrive in the leverage market. But if you must have debt, always have long term. Because the United States, we are the only nation in the world, in the universe, that has the capital resources available and strong enough, right, to have a 30-year fix. But I don't think there's any country outside of the United States that offer a 30-year fixed rate. I mean, that's ridiculous. I am not trying to point out, you know, the fun facts that many of our listeners, including myself, they have like a sub 3%. I mean, that's a once in a lifetime significance. But just and then like if you locked in your rate at 5%, for 30 years fixed, I mean, look at today. We'll pull a guy with finance is probably 7.65 on a 30-year fixed. Don't quote me on that, but I'm making an educated guess. So the kind of like that's the way that kind of broke things down. And what was for me was buying real estate. So after my first home, after my first home and I sold it. I sold that first home. And that was one of the biggest regrets that I had. I bought it for, I think, like 276,000. I sold it for like 450. And to me, I was like, oh my gosh, I made 100 grand in like, a matter of 2 years and I didn't do anything, right? But to look back, that home probably was $1 million right now. Um,
Yeah.
but, hindsight, like, it's always funny talk. You can't always just quote on this. But what works for me was that I wanted to take all of my excessive income that I want. So growing up, I was able to survive being broke. And I was never the smartest person in the room, and I never had the financial like literacy and the smartest to like map out, next 20 years, what I'm going to do, I'm going to put funds in here, I'm going to put funds in. Like, I'm not that person. Like, I'm not hit. But who I am is that I just know when I had no idea, I'm going to put it aside into something that's going to appreciate. And fortunately, as many millennials, like myself, from 2008 till today, this is a huge rise in real estate that we have ever seen in the history of real estate, right? So, um, in addition to capitalizing that, um, in I think a span of 17 years, I told myself, I'm gonna do my best and work my butt off, so I could buy a home every year. The American dream was to own a home and have a stable job, make six figures. But fortunately, as aggressive as felt I was looking back, I was I pushed the edge a little bit further because, given the inflation and such, six-figure salary is hardly, a measurement. But, compared to I think, I forgot where you're at. You're in North Carolina.
Virginia. Yeah.
Virginia is right. Compared from Virginia to like California, I think California, standard of living is slightly higher than most other cities and states, in the nation. Um, I bought a home every year. I leveraged the financial resources that I had, that I bought these homes with 5% down payment. Yes. Um, in case anyone asked, packed my bags and I moved so that I'm not considered a mortgage fraud. Because by those requirements, you have to have a primary, it has to be your primary residence, okay,
Right.
so to qualify for 95% finance. And I did. Every year, packed up my things and either I moved or I left my furniture there and I rented that residence. But those are kind of the things that worked for me in the past. And every 5 years, if I cannot pay off the home, I would sell it. Fortunate enough, in the past 17 years, I only sold two. First one was a regret, a hard regret. Although the second one was a strategic move that I wanted to try something. Which leads into something that I love to share is, so after all these things, the planning of how I got very fortunate to buy a home, one thing I kind of landed on was, um, what am I going to do with all these homes? I mean, I'm comfortable that these homes are, have wonderful tenants. And to look back, not all tenants are wonderful. But as long as they pay and we have a professional relationship, things kind of works out. Um, and I went out and networked and met other folks at this members. And I learned something called a value. It's here top fund. We have a big homeless crisis. We have a huge need or demand for housing because we have a lot of population, and given the cyclicality of the economy and changes, and not everyone in society can adapt to the change the way that I unfortunately to be able to adapt to this. So we have a huge demand in housing. And um, the policymakers in the state, as well as the local municipalities, have these permits for 80 years, um, as well as, like, I think, rezoning up to like a 4 unit for every single family resident. So
Oh,
fortunately for me, yeah, Gavin Newsom, our governor, signed a bill 2 years ago called AB 9 or AB 109. Don't quote me on that. But there was a bill that was passed that every required to be converted into the quadruple in the state of California. There are
mm,
still barriers that you never obviously overcome. So I tried a lot. And what I did is I built uh, a second unit in addition to my original. And my property became a duplex. So with that duplex, where both units are fully occupied by tenants, rather than a traditional, income, sorry, not a traditional sales comparison where they do appraisal. they leveraged something called an angel approach. And with the angel approach, they based off of the average cap rate from your net operating income. And that was
Mhm.
how I was able to sell that homes for about 70% higher than my immediate neighbor
Yeah.
who sold their home for 70% less than what I had sold. That was a similar footage. But again, I'm not like a residential lending expert or a value add specialist. It was just something that kind of, I came across, tried it out, and it worked out. And I love to share with whoever want to hear about this.
So it sounds so you've got a lot of this. Let's just try it out and move forward. Real estate, you're like, hey, I know that's going to appreciate. If somebody gave you a sage advice when you're very young, don't rent, buy. That got you on that road, and then you're like, okay, real estate's appreciating, as opposed to that Ferrari that I don't even really want. That's gonna, drop like a floor, like a rock through the floor in value wise. And then now you've got all these opportunities. You can put an ADU on there. You did this. You added the second unit, the duplex, and increased the value, and then maybe you can turn some of these single family into 4 unit properties at some point. But because you took action and you went forward and you took a little risk, all these opportunities have opened up for you in real estate.
Yeah, for the record, Paul, I always do want a Ferrari. I just don't want to pay for one. Well,
No, hey,
everyone calls
no,
one. Okay.
at some point it's okay if everything else is taken care of. I'm with you. Ferraris, it's amazing. So I'm totally with you. I think we talked about that when we were together. So that's a good day. So let's talk. I want to get a little bit into here before we finish up about this bank that I know you've been in the commercial lending space for a while, and I know you were the director or SVP of government commercial lending at a previous bank, but you decided to start a bank. Talk about how that happened and where are you now and what are the goals and who are you trying to serve with that particular bank?
Absolutely. So, 17 years in a financial institution, 11 of which I worked at a $1 trillion institution. Um, I think how I landed in a commercial lending or corporate finance space, started in middle market and started in what's a group called Special Assets Group. It just, you
Mhm.
know, um, how fascinating life kind of hits. So in the midst of a pandemic, I worked for this $1 trillion institution and, all focus on PPP loans, which is very, very important to help our small business owners. But in addition to that, the $1 trillion institution, wasn't really entertaining a lot of, other financing needs that our small business owners have, right?
Mhm.
Given that business had slowed down tremendously, but there are still finance. There are still businesses that were either acyclical or countercyclical, or they were serving, the front line in what we call PPE, which is personal protection equipment back then.
Mhm.
So these were a lot of demands that kind of didn't, I was not able to help, right? And putting aside, right, like what I had incentive to do, or putting aside what, my job or my income protected, it was really just to help people. And but the worst anything that I could possibly do is tell someone I cannot help you. And that
Mm.
makes me feel very, very useless. And I hate that
Yeah.
feeling. So I explored, right? And at that time, given what was truly my decision, gave me a full ride scholarship for the university, for my MBA. I was approached by this community bank, $500 million institution, and which I've never heard of, but had a significant program. And basically, it was told, and he's saying that your current lender do not do, you'll be able to have a platform to help those borrowers. And I was sold. It was
Mm.
despite of how much, revenues are brought to the shareholders, despite of how much, income that got generated, but it was the fact that we were able to help folks. Because money can only drive so much, but it's the
Right.
resources that was available, on my plate so that I could, and that was a huge trigger. And what came was that trigger was that, I quit my $1 trillion institution job that was awesome with a terrific silver platter. They stopped paying for my tuition at this, for a scholarship to my MBA. And I said, you know what? Um, I'm gonna help my followers. I'm gonna supposedly make a little bit more income than what was previously generated, and let me explore some schools that you know um I'm interested in and I wanted to. And there were a few schools that I wanted to go to, and there were a few schools that were available to me. I got into two really, really great schools, but I got accepted to them, but they were on East Coast and given this limit. So I am very fortunate to go to and just recently finish my program, my executive MBA at University of Southern California, not the University of Southern Carolina. Some folks make that jokes, but right. So go Trojans. And
You're
well,
not a Gamecocks? You're
so
not a Gamecock.
like no, in that like turn of like so many different like choices that I just haven't decided to go to this $500 million institution, decided to leave my MBA and go to an executive program that I had to pay out of pocket, is where I met a very, very close friend, a friend of mine, who's the general counsel at my current institution that introduced
Mm.
myself to this band and group of significant friends, and found that fast forward 3 years, and we established our institution called the Icon Business. Of the many hats that we all have to wear. So what I am fortunate to do at this current institution, help our followers as well as work for my shareholders, is to be the director of government and commercial lending. What does that do is to provide and leverage the existing government programs that are available to help our small business owners to reach as well as to access the financial needs that they have. What is that? It pertains to SBA loans, pertains to the USDA loans, and in California, it pertains to the California State Guarantee Program. The biggest misconception, right? And for the past like 30 minutes, we talked about real estate. But I do love real estate, including my nonprofits, ventures and the passion.
Yeah.
But um, the biggest misconception is that's all we do, and that's not right. Because small business owners don't do the business and just need to buy real estate. They also need working capital. They also need capital expenditure financing. They also need specialty financing. And I have a business bank. Fortunately, in my role, I am able to help these borrowers. My team, we're able to help these borrowers to access, the capitals that they need, and when they need a new piece of equipment, when they need the working capital they need, a new R&D that they need for their staffing and some of the talent that they need to acquire. So it's not just all real estate, but real estate is a very big importance, right? It's a big benchmark and a milestone for a lot of businesses, but there are plenty of capitals that we can provide, right, for our small business owners to help with their business. And last thing I want to share is that we're traditional. We're not a UC firm. Right? We're not a private lender. And one of the best things when you finance through a traditional lender is that the only gain that we have is the interest that we earn on your loan. You don't have to give us equity. We're not here to structure of mezzanine financing. I'm not one of the sharks on the Shark Tank, right? We're not here to negotiate a royalty or slash, your equity. So,
Yeah.
not just us. And there's plenty, right? And I was sharing with you, Paul. I'm just a small potato, and there's vast majority and tank of resources available. So I encourage a lot of small business owners, whether you heard it here first with Paul Neal or just go out there, and there's so many available resources. And you just have to ask, right? You just have to ask. And people might say no to you, but if you don't ask, answer's always no. So
Right.
like I'm available to be asked any day. And
Well, William, that is fascinating, and it's exciting. And you've got a great runway ahead of you with Icon Business Bank and what you guys are putting together. And I couldn't agree more that and I double underscore the fact that it's not just real estate. Yeah, it's working capital. It's all kinds of things you need to. I mean, cash is a lifeblood. I think we said it early on, the lifeblood of business. And and the thing is, it's not just a capital need when times might be tough. I've found that a growing business consumes cash, about twice as fast as a stable business, because you've got new employees to hire, inventory to create, you've got advertise, you've got a lot of things that are happening, which is good, but you got to have it. And so to have someone like you that has access to conventional funding, but also the SBA programs, the 7A, the 504, and the USDA is critical, and every business owner needs that. And I'm excited to be working with you myself. So tell everybody this as we wrap up, William. How can someone get in contact with you if they have a question or a need for small business financing?
Yeah. I would love to share my contact info with you, Paul.
Sure.
And so you can reach me by phone, you can reach me by text, you can reach me by email. I we with through the SBA and USDA platforms, so we do lend nationwide. And if you're
Mhm.
in Southern California or in California, I'd love to connect with you as well. We might just have a little bit more resources in that as well.
Mhm. Awesome. Awesome. Okay, great. Well, I'll put your contact information in the show notes. How's that sound?
Sounds terrific. Thank you so much.
Awesome. Well, William, this has been a total blast and a great pleasure, and I just love your youthful exuberance and the trajectory you're on, the success you've had, and it's infectious, man. Your enthusiasm, and the coolest thing is, like, man, I really appreciate, and I mean this from the bottom of my heart, people like you that have immigrated here to the United States, and you're bringing so much value to this nation, to your community, to all of us, and you make us better with what you bring, and with your attitude and your education and your work ethic and your heart for people. Just man, it's just amazing what you've done, and what you're going to continue to do, I'm sure, as time goes on. So I appreciate you being on, and just appreciate you, man.
Thank you, Carl. And good luck to everybody out here listening to this, and keep asking and keep driving. Never give up. Thanks, Carl.
Let's get that Ferrari. Hey, gang, just winding down here today. Thanks for listening to the show. And as always, if you need capital to grow your business, you're looking to purchase commercial real estate, or build a building, or invest in commercial real estate, or you're looking to acquire a business, or a competitor, or just need growth capital, we'd love to talk to you. We fund businesses all day long. Our mission is to help entrepreneurs win, and to fund their businesses and fund their dreams, so that they can make an impact in their community. Reach out to me today. Go to our website, click the button to schedule a 20-minute conversation, discovery call. We'll have a quick conversation, see if there's a need, see if there's a fit, and we can take it from there. The website is VPC, Victor Paul Charlie .capital. That's VPC .capital. All right, there's no .com on that. It's VPC .capital. As always, keep crushing it, and hope to see you soon around here. Take care.